Hey guys, Sam here. Let's see, we're middle of the day here on Tuesday, what are we on now? We're the 12th of December. And I've got Monero in front of me. This is another crypto having just an amazing run. It's been very technical, and there's a few things to learn here, a few little tricky turns here, and some things maybe I can teach you as well. So, as I often do, given this kind of move here, I've gone all the way back to the lowest low. You know, I just trust me. It says so. What is that? That's like less than $1. It's the lowest low I could get. That Monero to the dollar traded on Bittrex. So that's the absolute lowest low. So given the what I would propose to you now that we have a 1-2 in on the largest scale. So we can start to draw some retracements here. So if I go from my absolute low there up to my one high, which I propose to you, you can see here we came down here. So we're expecting a 2, highest probability zone between the 618 and the 50. So we get, it looks like we've got the low in here, and then we get in this long sideways zone here, which on a 4-hour, hard to even qualify it or give it a count. It doesn't really get meaningful. What's meaningful is right here. We do not take out the low, so I think this is our low to project from, since that is the lowest low of the retracement. So very very valid location to expect that between the 50 and the 618. That's our high probability zone. Given that, you can see that here was the algo target here, so that we got to it, and a little spike action there. And now we've gone up, and now we're at an extreme here potentially for the negative 100. Now I've got a hot box up there that's been drawn for some time, and let me show you why I've got that there. So if I pull this off just to declutter the chart, and we go to now our Elliott target, so again pulling from the absolute low to my wave 1 high and projecting from my 2 low. Well, you can see that there's a hot box for the highest probability zone for a third relative to the largest degree, right? So we know, and you've seen many videos where I talk about that. So the highest statistical probability for a wave 3 is between the 1618 and the 175. So we get the hot box up here. This is a target box. We may be getting there sooner rather than later. So that's certainly something that we want to have as a potential target, and not necessarily to be picking the high, but for looking for a technical reaction there, right? So if we come up and we tap the 1618, do we get a reaction there, potentially putting in a pivot to show us that we might have our third high in? That's what we're looking for here. So we can start to project for the fourth, next opportunity to get long on this absolutely largest degree that we see here in Monero's history, at least relative to Bittrex. So let's break this down. I'm going to go down to the hourly and show you where this gets interesting. So here, let me scrunch it up so you can see it. So there's our 1-2. Here's our 1-2, but we really don't start to get any significant until we pivot here. Then we do get a 1, 2, 3, 4, 5 into a 1-2. So let me open this up a little bit. So here's our 100%. So we know we're beyond that. So if I open this yet again, we can get a handle on, do we have good pivots? So assuming that we've got a good low here, we could actually pull from either one, from that absolute low to what looks like our 1 high here. So here's the 50. So we get a couple of ticks from the 50, and then here's the algo target, right? So this certainly would appear that we've got technical trading. So algos are in. Well, here's the 50. There's their favorite target, the negative 23.6, and they take it, and we see the reaction here. So it appears to me that we've got 1-2, and then we get another 1-2. So looking up ahead here, it's a little bit tricky. I see this as a 3-4 and our 5th here. Now take note what happens here. So you say, the tendency is to forget about these, right? So once you've seen the 23, then you've just moved on. But it's always a good idea to, revisit your dominant pivots and see if they're having any play later on as the market moves away from them. So you can see here that we come up and to the tick we get the negative 618, which would be the extreme from this 1-2. So we had reaction, there's the negative 100, perhaps a little front run reaction, and then to the tick at the negative 618. So again, what's the point of all that? To show you that we've got very technical trading and that we've got algo participation. So again, just keeping it the same process, guys, the same process every time. If that's my 1-2, I'm going to start to project for where I'm likely to anticipate my 3. So if that's the 1-2, well, I come just a few shy from that probability zone that we just looked at. We know this is the high probability zone for a third. We get a little bit shy of it, but then we start this choppy sideways action. So potentially now we've got a 4 in here, and then again, just same thing over and over again. So if this is the 2-4, then I'm going to look for that relationship between the 2 to the 3 high. It's shallow. We're between the 23.6 and the 38. But we get here's the algo pull, and if we're going to look for a relationship in the 1 to the 5, then I'm going to pull from my 1 here, projected from my 4. There's my 100%, the most common. We get 2 and through, come a little shy of the 1272, and then we get the big reaction. So it would appear to me that given that, and given the size of the reaction, that we complete this 5-wave sequence here. We can take that off. And that we've got now a 1 on the larger degree, on the next degree, I should say, because our absolute largest degree we looked at is, we can't even see it here, right? So our largest degree is back here. Okay, so we've completed what it would appear that we've completed a 1, and now we get this deep retracement. Okay, so let's just check it. And again, the point of going back and doing this work is to check to see if it's technical. So do we have good pivots that we can project from? So if I take the length of the 1 wave here, go to that absolute high, well, here's my potential second. Now, we come a little shy of it. We come a little shy of it here. So we do get an ABC. So if I open that up, right, we do get an A and then a B and then a C. But this, not unreasonable to see a 2 come between the 38 and the 50. Statistically, more likely to come between the 50 and the 618. But it doesn't get there. We got a strong market. So reasonable pivot here. So I can certainly see a clear count here. So, there's possibility that this gets relabeled, but given that that's the deepest retracement that I see along the way, I operate on the assumption that we have a 1 high in, and then you'll see here why I think we get confirmation of that. Well, if that's my 1-2, I'm going to start to project for my third. I want to make sure that at least I get the length of the 1 wave. Do I qualify as a third? So if that's my 1, projected from my 2, and that's my 2 low. Well, I've made the length of the 1 wave, so I can validate this as a third, potentially a third here, because it wouldn't be the shortest wave. Now, here's where it gets interesting. So, if this is indeed a third, we've got a third up here since we're past the 100%. Our expectation would be that if we've got a 1-2, if we're going to stay impulsive, that the 4 does not overlap the 1. Right, and you can actually see my alarm that was sitting here just above that to see if we get close to it. And what happens? Well, here's the pivot made right here, and I promise you that does not happen accidentally. That's not random. So that would confirm the count. The likelihood that we have this is a 1, this is our 2, this one of these pivots is our third, and that we have a 4 given the technical nature of that. Then looking for a retracement relationship from the 2 up to the 3. We look at that. So we come just a couple of shy. So it's front run just ahead of the 618, right? Just classic technical trading, right? It's as good as you're likely to see it. Just perfect. Doesn't overlap the 1 right to the 618. That would be a last stand for a fourth. It's rare that a fourth will go deeper than that. But we hold the wave 1 high and then look at the rip that we're in. Now, here's where it gets a little tricky. And I think there's something to learn here. So it would not be unreasonable, given that we have this 1-2 in place, that you would expect subdivision yet again. So this, we can count out a really nice 5 wave here. So it was very reasonable to think that you had a 1, 2, 3, potentially the 4, right? Because we don't overlap, and that we're putting in the 5. Here's why and let me lower that degree. So let's go to submenu. So we get a handle on this. Okay, that's very reasonable to look at that and be thinking, okay, well, there's my 1. We don't overlap here. So potentially, this is my 1, 2, 3. I don't get a new high here, and then I get this very complex correction. Well, this is kind of something we looked at in Bitcoin yesterday where we had disparity from exchange to exchange. If you look at the size of this correction and the length of time here, this is what we've got in that correction. Now compare that to what we get if the assumption is that that's the 3rd and this is the 4th. Look at that. Look at the size of this. The ratio of the size of this correction in price and in time is so much more dramatically larger than this that we lose. An Elliott count will typically have some symmetry to it that this is inconsistent with. So this implies to me that because it's too much, it's too big relative to this 2. Even though, yes, we have the rule of alternation in Elliott theory that we have a simple correction followed by a complex. The size, the depth, the range of it is simply too high for that to have the kind of symmetry that you would look for. So when I see that, I'm suspect of it, and I look at that and go, well, could something else be happening? Could we have an alternate count that would maintain, would stay valid, but would maintain the symmetry that we look for? So if I pull from my, well, let me take that off now. So if I pull, so I can see it, if I pull from my 2 low here, and I do get a nice clean 5 wave into my 1. So if I pull from that 2 low, which is a simple correction, come here, pulling from that up to my 3rd, this gets my attention, right? So the common retracement point for the 4th wave is between the 38 and the 50. So the fact that we stall here and then we get one more little pop up here, this looks much more likely to me, I can grab this, as a 4 here. Now look at that. Look at the relationship now here between this and this. That has much better symmetry, which would imply that we get a truncated 5th here. Truncated 5th. So if I take that off, that tells me that the higher probability is that I've got this. And that even though I got this wick up to new highs here, this does not look like, we just don't have the symmetry here. So I would propose to you as my primary count that this tops the 3. We know it's in excess, that this pivot here is in excess of the length of the 1. And we've seen a lot of truncation in crypto. So given this 3-4 and that better symmetry relative to the 2 wave, I think that's what you've got. Well, if that's my 3 high here, then what's important to me is to look at the relationship from the 2 to the 3. Now look at that. In that symmetry. Now this starts to work better for me because I get my deep correction here, but it's more relative to the larger degree. This is my 2, this is my 4. It's bigger, but the range of it has better symmetry. So I think we've got the 3 in here. This is our 4, the anticipation that the 4 not overlap the 1. Well, why is that important? Because it affects us in terms of our projection for the 5th relative to the 1 projected from the 4. If this is our 4 and we make the assumption that we get a truncated 5th here, given this perfect retracement here, that tells me that likely we're headed up. So first thing I'm going to do is put a pitchfork on it, because I know I've got high probability of making the median line. So here's my favorite corner pocket trade. Just couldn't be any more perfect than that. Right to the 618, right at prior resistance, offering support, the wave 1 high from an Elliott count. We have 80% probability of making the median line. 80%, right? Let me repeat. 80% probability of making the median line. Please tell me where else in the market you get those odds. And that's a rhetorical question, because there is no place where you get those odds. So we're not there yet. We haven't gotten to it yet. But here's our algo target from this 618. And here's that box that we drew. Remember the box we drew for early on, where we were looking for the highest probability zone for the 3rd wave relative to the largest degree, the very largest degree, this degree here. Right? Do you remember that? So that all starts to look like it's lining up rather nicely. So here's that 3rd wave. So this may end up moving up over here. So if I open that up again, that looks to me like we've got good probability. Now, additionally, I would want to measure, if I can get it up here where I can get it, I would want to measure the length of my 1 wave. So if I go, whether I'm pulling from here is to start the last pivot before we move higher, it's close enough. So if I pull from that to my 1, and I project it from my 4 low, now look at that. So now I'm really tightening in on it, right? So I've got that 1618, but I get a second box here where I've got this great little overlap here. Let's put that in a different color. Where I've got that great overlap here. So I've got this confluence zone. So I've got confluence within confluence in conjunction with the median line. Now you tell me if you think that that's likely to get up to that high. Now, nothing says it must, but I can see a little 1, 2, 3, 4. It's trying to get there. So here's my larger target here for the 3rd. Here's my lower degree. Here's my 100% projected from the 4, length of the 1. And then here's the straight algo pull to the -23. And I've got 80% probability of getting to the median line. Right, so if you're in that, and there was definitely opportunity here, so you can see, it's trading very technically. So just eyeballing it here, you can see a really nice 1, 2. Here's 3, 4, trying to get up to that 5 up here. Do you see that? So here's my wave 1 high, doesn't get overlapped. Here's my potentially, right? We don't know for sure, but that looks like we've got a 1, 2, 3, 4. Going up, trying to find that 5 at one of these confluence zones and get to the median line. So doing it again, right? Just as I did before, I would take the length of the 1 projected from the 4. There's the 100%. Here's the 1618, 175 box. So I get another box. So I have a huge cluster up here. A fib cluster, a confluence zone. Now, we may not get there, and it may be that this ends up being our 3, and our 4 comes over here, because this was a shallow 4. So we could see 1, 2, 3, 4, 5 within the 3. We might be getting that subdivision, and here's our 100% relative to the 1. So this may well be the 3 here. If that's the case, and we're going to retrace a little bit. So what are we looking for? Here would be a nice opportunity to get long. If we're going to come in down here where we've got some market geometry, we know we've got a hard cluster of targets there. We wouldn't want to see the wave 1 overlap, so it could be right there. Now, if that's going to be our 3 high, and we're looking for a relationship from the 2 to the 3 high, well, here's our 50% right there for an algo pull. And then here, do you see this right here? So if I wiggle that, do you see that little green line? Look, talk about a cluster. Massive cluster, massive fib cluster up here, all in conjunction with the median line. I would say very high probability that we're getting, what is that, 348? At some, whether it's here, so you don't know. All you know is that you've got high probability to make the median line. Now, if it's going to, from here, it could be here, could be here, could be here. We don't know for sure, but we're not there yet. So I would anticipate there's some sort of a tap, then maybe we come back for the 4, and then you've got, again, all of that energy to try and get up to get to the median line again. If oscillators can be any help there, you might look for some extra timing there with the RSI. Do you get any help? Well, you might get a little roll over here. This was awfully good. I mean, that's as good a setup as you get. You have everything lined up there for you. Price, pattern, fib, Elliott, RSI, pegged down below 30, and look at the rip. And then from that, 80% odds. So there's a buy there at 212, target, big cluster up here at 346. All right? I mean, these markets are as extreme as they are, and as just radically volatile, and these huge pumps that we're getting, it's technical as hell. It's because this is just human emotions, fear and greed in the market. And you've got algos that are all over the place. So, buying at a 50, not a bad thing to do. Put your pitchforks on it. If you can understand the Elliott Wave, that's just going to make it all the better for you to try and weave around what's happening in the market. But that's about as good as it gets. That's incredibly technical trading. This was absolutely spectacular, and we're still not yet to the median line. So that's one to watch. All right, guys, that's 20 minutes. I'll wrap it there.